$300,000 for a family filing jointly. And that would make you an accredited investor, and all of a sudden you can invest in all of these private offerings. If you don't meet that requirement, you can't invest. What has changed with this is it removes the accredited investor requirement. And so anybody in Texas can invest. There is a cap on a per project basis, so $5,000 per person if you're not accredited. And the projects can raise up to $1 million per year. One of the other really exciting things that I think y'all are hearing about first, I don't think I mentioned this to anybody before, but at the end of October, the Securities and Exchange Commission approved an increase from 1 million to 5 million. So we have to do a little bit more work to actually get that deployed, but this number is going to be going up. How big is this? Well, if you look at the U.S. real estate market and the global crowdfunding market, the global crowdfunding market in 2015 was $34 billion. And that does include places like the UK that have been doing this for a while. And in the US, real estate, just commercial real estate transactions, have been $90 billion a year and growing. So when you look at where this could be, we could be looking at $180 billion in overall transactions. What we do is we act as a vehicle for people to be able to invest in these businesses. So we are not a fund. We don't hold your investment. We don't assess a management fee. We're not a REIT. All those things are different. What we do is we actually allow people to make direct investments into a Texas company, a Texas project, and then we act as a platform to handle that transaction for investor accounting purposes, for regulatory purposes, and for banking purposes. Every investment on our platform is held in an insured escrow account at a third-party bank until the fundraising is complete. They also act as a paying agent, so the returns back to the investors go through that banking layer. Each individual investor can have an investor account that's got the same FDIC insurance that any other account would have. And we provide an online platform for all this to happen clearly and transparently over the internet. When you look at what are the major areas that this is being used for, it's really across the board. But as you're looking into your communities and looking at the kind of projects that may come in front of you, these are some of the examples. These are from Title II platforms, which is accredited investor only, but we think the mix is going to look pretty much the same for across all crowdfunding platforms. So real estate has been a huge investment vehicle for this. Oil and gas has actually done pretty well, all things considered. Other real estate investments, e-commerce, entertainment, organic food and beverage. This one's kind of interesting to me, that this actually was able to break out as its own category and show up in sort of that top 10 list. We're seeing consumer products do pretty well in this kind of investment, assuming that they have a big enough network of buyers. So for investors, what we provide is retail and accredited investor engagement. So you're making investments in your community. You're helping grow that cycle where your dollars are spent locally, that business grows, builds jobs, returns money to you, and that cycle can continue. And it also provides a way for you to have an ownership connection with that business in your community. So it's not just that, hey, I'm going to go buy a product from them, but I'm actually a part owner of the company. So how do these usually come together? On our platform, what we're seeing is there's a few different ways. There are some projects, smaller projects typically, that will be funded 100% by crowdfunding. So an example of that is if you're redoing a home, then that's something that you might be able to do under that $1 million limit just purely off of crowdfunding. And we've had people do that. One example is a gentleman, I think it was mentioned to Randy before, that there is an area in San Antonio where the government spent a lot of money in promise grants to improve a portion of San Antonio near downtown, but the surrounding areas didn't receive grant money. So what investors have been able to do is go into those areas and privately invest in improving those areas. And so there are a lot of residences that are being redone there. It's really close to downtown, so San Antonio's had this, what they call Decade of Downtown. It's really been focused on growing business in downtown, but they've had a problem in that there's not any housing density within downtown at this point. So anybody that works in downtown has to commute in. Well, this neighborhood is 5 minutes from downtown, and you can walk it if you wanted to, or you can take a bus or drive. So it's been really great, and some of those projects have funded entirely off of crowdfunding. More likely what we're seeing is examples like this where there's a bank loan in place, but the LT, the loan to value ratio, still requires the sponsor to put in money. And so on a small project, you can go, basically 50-50. On larger projects, this is a pretty good example. You can actually do a $5 million project on Mass Venture, regardless of that $1 million limit, when you couple it with bank financing, because that $1 million only applies to the money that Mass Venture is funding. So your total capital stack is usually a lot more than that. So you'll have a bank loan, maybe that's 60%, 70%, 80% of the project, and then you have this other capital requirement that's between 20 and 40%. If you have a successful project owner that is doing a lot of projects, they'll find that they run out of working capital before they run out of bank financing, right? So one of the things we can do is come in and say, okay, well, you have enough working capital for 3 projects, you have 5 on your schedule, we can help you get those other 2 done by bringing in the crowd to 1 or more of those investments. And for startups, it's kind of the same thing. You can do a raise on Mass Venture, where you raise part of the money that you need, and then you go on and raise the remaining amount from angel investors or venture capital. This is just another example of a sample investment profile. It's kind of the same thing we've been talking about. And there's other things beyond what we do. So you may have heard of something called Regulation A+. This is for larger projects. This actually allows you to raise up to $50 million through a form of crowdfunding. It's quite a bit more complicated. On our platform, the average time to market is about 45 days. So from the point when the project owner starts looking at it to when they can get their project funded is 45 to 60 days. On a Regulation A offering, you're looking at a minimum of 6 months, and the average has been running closer to a year. But they're also much, much bigger projects. And there's actually what they call 2 tiers. So Tier 2 allows for you to sell your offering in all 50 states. It's done by making a filing with the Securities and Exchange Commission, which is then reviewed by the commission, and they come back with edits, and you go back and forth. I've been told that the average cost in legal on one of those Tier 2 offerings is about $100,000 to $150,000, which is a lot, but given the size of the raise, it's actually not bad. This is something that just came out in June, so it's pretty new. We've only had a few of them that came out and have gone through and actually been completed. But we'll see. I think we're going to see a lot more of this, particularly in the large real estate context. There have also been changes to 147, which is the umbrella rule that we operate under. So those are some of the things I mentioned earlier, the limits going up. It was $1 million before. It'll be going up to 5. And one of the changes we're most excited about is that it will also allow out-of-state investors to invest in projects in Texas. So as of today, for a project on our platform today, all the investors have to come from Texas, and the project itself has to be in Texas. What's going to change with this is any state will be able to have fundraising that crosses state lines. So if you're an investor in Ohio or New York or Florida, you can still invest in Texas businesses this way. So we're really excited about that. I'm not expecting to see that live until this coming summer, this coming July. at the earliest, but it is there. There's also Regulation CF, which is the federal crowdfunding regulation. The one I was telling you got delayed and delayed and delayed. It's live now, and so this is sort of a comparison chart of the different rules. This is getting a bit into the weeds, but I'll run you through it quickly anyway. On the sort of things we do, the cap is $1 million going up to $5 million. A private raise, which is this 506C, this is your typical angel investment through somewhere like AngelList. There's no limit, but it's accredited investors only. Whereas if you're doing a 147 or an A+, it's open to everybody. And then Reg CF, which was previously called Title III, has a scaled limit. So that's based on the investor's total income, and you get a percentage of that. The other thing is a lot of these have what's called limited solicitation. So on most of these, other than A+ and 506C, which allow you to kind of broadcast it everywhere, most of these others have limitations. So for us, we're not allowed to go out and put a billboard up that says, invest now, here's all the details, and just click this link and your money will get sucked out of your bank account. It doesn't work that way. What we can do is say, these are the things that we're doing, come to our platform, look at the offering on the platform. Investors have to register with us. We have to know what their residency is and verify that. We have verifications we have to do on the sponsor, background checks, securities checks. So there's a lot of kind of behind the scenes stuff that goes in to making these work. And so the question is, once you figure out which of these vehicles are best for you, how do you actually do this raise? If you're working with businesses, if you're counseling entrepreneurs, one of the most important things to remind them of is that when you're dealing with crowdfunding, it's not like a bank loan where you finish the loan process, you sign on the dotted line, and the bank gives you the money. You have to actually go out and get a community to support you on this, which takes time and it takes effort. I tell people this is not any easier than doing a bank loan. It's a different kind of effort. It's not any easier than doing a private fundraise, but it's a different kind of effort. If you were raising money through your typical syndicated private investment, you're talking about going and doing investment dinners and presentations and the whole road show type thing, and burning a lot of shoe leather. It'll take you about as much time to do it on crowdfunding, but maybe you can do that while you're sitting on your couch at home working on it. And so it just depends. But the biggest thing that you can do is to start building your email list early, about 3 months before. So you want to start looking and figuring who's going to be interested in the project, when do I want this to launch, and start building that ahead of time. There was a project on Kickstarter which was called, I think it was called the Coolatron. It was a cooler, like a Yeti type cooler that had a blender and speakers and a Bluetooth charger and all this stuff built into it. And it made some news, because it raised a ton of money on Kickstarter. But when the guy did his raise that was so successful, it actually was not his first time. He had tried twice before and been unsuccessful. But some of his previous raises had been in the winter, and nobody's buying coolers in the winter, right? So when he did one in June, he had a benefit that he had his list from before of all the people he had contacted, and he was doing it when people actually wanted the product. You have to have a compelling launch. Video is important. It's constantly surprising to me how important video is. I always kind of understood that that's important for consumer products. If you're trying to sell a cooler, people want to see it in action and everything. But it's important even for the kind of investment raises that we do. People have trouble visualizing what your objective is just based on plain text. So photos and video, anything you can do to help people understand what's going on. You also want to set aside time and money for marketing, and make sure that you're using social media to be successful with this, and there's something called paid boosting. So if you've got something that's already getting a little bit of traffic online, you can toss some extra money at the successful messages and have them grow more quickly. You also need to bring your own crowd. I tell people you need to have 200 backers of some sort to get your project started. And when I often tell this to entrepreneurs and sponsors, they're like, oh my God, 200 people, where am I going to come up with 200 people? Well, when you think about it though, you know, if you talk about, let's say, your friends, your family, people in your church, people in your community, if you're a real estate developer, your project subs, all of your contractors, your clients, your customers, the people that are going to own this, you can find 200 people that should know about your project without too much effort when you look at these extended networks. And if you can't convince your brother or your sister or your spouse or your sub that this is a good idea, maybe it's not a good idea. But you also really want to focus on momentum, right? Because this is one of those things where success begets success. So if you're sitting there with a project that launches and it's sitting with a big fat zero and nobody has invested in it, you know, it's going to be hard to get some random guy on the internet to be like, yeah, I'm going to jump in and do this. But if you can show some success and you can get people in there, then it starts to grow. And one of the things that we find, especially with consumer products, is there's this feedback cycle where products that start to trend and start to be successful generate press interest. And press interest generates more backers, which generates more momentum, which generates more press interest, right? So this is the kind of thing that you're really trying to key off of in a crowdfunding campaign. There's a challenge with that for our issuers in terms of real estate, partly because we don't take out billboards and ads for that sort of thing. But it works even within your investing community, right? When people that you talk to look at it and go, yeah, I like this. When they see other people participating, then they're like, all right, I'll come in with a little bit of money for this. And a lot of platforms will allow reinvestment up to your limit, right? So one of the behaviors that we see on our platform is that people will come in, the first time they invest, they might invest $100. They might invest $500. Not big amounts of money, but it's an opportunity to try out the investment process and see how it works. But when you've been successful and you've made some money and you come back, it's much easier to say, okay, well, you know, I like this one. I'm going to put some real money behind this. I'll put $2,000, $5,000 behind it. And we have some customers that we've talked to who say, look, I've got, you know, my portfolio and I've got a bunch of money in stocks and in the public markets right now, and I want to have some of it in real estate. And so I've carved out this allocation that I'm going to use to invest through crowdfunding and other methods into this asset class. But you've got to be able to show that you're successful for people who want to jump in on that. And you've got to, you know, all of this presupposes, I should qualify it, presupposes that you actually have a good project or a good venture, right? I mean, that's the threshold of do not pass go. But once you have that, these are all ways that you can grow your campaign and be more successful. And the biggest one is keeping in touch. This is really, really crucial, and it's also one of the things that people fail at the most often. A lot of times when you're a business owner, your focus is on crowdfunding, raising money, getting that in there, then you're off to the races. You're starting construction, you're doing all the things in your business that you want to do. But you need to make sure that you're coming back and telling the investors what's going on and what's happening. And we see this across all categories, that if you're able to keep your backers happy and keep them engaged, you're going to be more successful, not just in your fundraising, but in your business as well. Because you can inform backers of setbacks, and you should have flex built into your schedule to accommodate things like that. But you know, I was part of a Kickstarter raise where a guy was crowdfunding a USB cable, and he ran into a situation where he had a supplier that was going to provide the little connector on the end that plugs into the iPhone, and those have to be Apple certified and all kinds of other stuff. And ultimately the supplier, even though they'd given him a quote, said, well, you know, for the volume that you're at, we're not going to stick to the original quote. It's going to be 40% higher per connector. But he was really good. He went back out to his network and said, hey, this is what's going on. And somebody that was on that list was an electrical engineer and had some connections, and ultimately was able to connect him up to the right people to go to a different supplier and get the connector for more or less what he had projected for it. So you never know. You know, for real estate guys, you know, I tell people all the time, have you ever had a project where you needed to talk to the city or you needed to talk to the zoning commission and negotiate for something? And have you ever been in a situation where the community was pushing back against you because they didn't agree with what you wanted to do? What if the community were your investors and they were able to support you and say, this is what we want, you know, we do need this. Like, these are all things where the intangible benefit is not something that goes easily into a spreadsheet, but can really benefit your business as you go along. And so thank you very much for letting me talk. I'm sure there's a lot of questions I'd be happy to answer. And we would love to visit with each of you about how people in your community can take advantage of crowdfunding. And as you come across connections and people, you know, we're always looking for investors, and we're also looking for good projects. And it takes both to be successful.
You had a slide that depicted the categories of investments.
Mm-hmm.
Do you have any information about return on investment?
In what sense?
Well, they invested, so what did their return look like?
Sure. So on our platform, we tell our customers, our clients, that they should be shooting for somewhere between an 8 to 18% annualized return. These are a couple of the projects that we've had go through recently. We've had some of these things that were as high as a 30% annualized return, but that was in the case of a house. This was one of those refurbs that I was telling you about.
Mm-hmm.
They flipped that house, completed it in 4 months. They actually funded their project completely on Christmas Day, and they had completed the project by February and were able to distribute returns to investors. So that came out really high. That's probably an outlier. What we're anticipating is that most of these projects are going to be, you know, somewhere in the 8 to 18 range, and that mostly depends on the risk profile of the project. Right, something like that, like this Cowboy Crossing building. This is actually here in North Texas, so this is a project in Arlington that's live right now. And so they're looking at a more conservative return. I think they're saying 16.5% on an annualized basis over the period of time that they're going to do this. But you know, that's very different in terms of contingencies because it's an existing project, it's fully tenanted, they've got lease guarantees and all kinds of stuff like that, compared to a fix and flip where they're like, hey, we're going to buy this thing and we have no idea what we're going to encounter, right? So you have to kind of look at them differently, but it certainly beats, you know, the 1.75 or whatever that are being advertised on CDs these days. So, yeah.
What can you tell us about the fees that are involved in this process?
Yeah, so the way we work is we don't charge any management fees. We don't have a lot of different fees. We take a single flat fee at the time when the funds are released from escrow. That's anywhere from 4 to 9% of the total funds in the project. So when you're creating your pro forma on this, you want to budget for cost of capital just like you would in any other funding source. And so that's a statistical average. I mean, I think it'll be interesting to see what happens as we go forward. Kickstarter's average is 5%, but they have almost 3% in credit card fees on top of it. We don't do credit cards at this point in time. We haven't figured out a way to make that economically beneficial to the project sponsor. So all of our transactions are done through ACH, and so we don't really pay much in the way of fees on that, and we don't charge anything for it.
Does Mass Venture vet each project, or is it up to the Mass Venture and single investor to vet the project that's in Mass Venture?
So that's a good question, and it's both. By law, we are not allowed to offer investment advice. This is actually something I've gone back and forth with the regulatory authorities on a lot, because I think it would be better for us to be able to offer advice and say, in our experience, this one's going to be more risky than that one, but there's a lot of concerns they have around people using it for the opposite purpose, right? Of saying, oh, this is great, you're going to make all this money on it. So anyway, we cannot make a recommendation or offer advice. But what we are allowed to do is screen the projects before they come to us, and we can make a decision on which projects we will accept onto the platform. So when we're doing this, we have a pretty extensive due diligence process that we go through to evaluate the sponsor, to evaluate the project, and determine whether or not it kind of meets our standards to be on the platform. And we're very cognizant of the fact that, you know, the best way for us to grow the platform is to have successful projects. And so there's not a fixed thing where I could say, well, if you have a, you know, if you have a return above this number, that's going to make a difference, because it could be, you know, really anything. We do a very extensive look. But there's also a discussion section, and this is something that we worked with the regulators on as well, and it's something that's kind of unique to the way we crowdfund in Texas, is every one of these offerings has to have a discussion section for investors to ask questions. And the answers to those questions have to be posted publicly on the platform for everyone to see. So it's not like the old days where someone could call up, you know, and get one answer, and somebody calls and gets a different answer. It's all up there for everybody to see. And we've had some users that have asked really good questions. I mean, we had one guy on a previous project who was asking, okay, well, you know, you've calculated the cap rate on your project as this. When I calculated it, I came up with a different number. You know, explain what's going on there. And the project sponsor was able to come back and say, well, I've been doing this for 20 years, and I think you probably didn't do that right. So if you go back and do your math, you'll come up with it this way. But that kind of conversation allows everybody on the platform to see and participate in it, so that those questions are available to everybody.
On the back side of that, if one of these goes south, is there any recourse? Let's say you find that there's some misrepresentation, for some reason it went down to an unknown route. Any recourse from the investor on those?
Yeah, so at the end of the day, you're making an investment in a private company, and so the laws that would apply in any case about fraud and misrepresentation and all that apply here as well. But because each of these offerings is registered with the securities board, they also have oversight and jurisdiction over this. And if there is a violation in terms of disclosures, in terms of the information provided, accuracy, et cetera, they have enforcement authority on it, up to and including criminal jail penalties. So, you know, we work with our sponsors and their counsel and their attorneys to understand what needs to go into one of these offerings, because you're bringing in investors. You're not just making potato salad on the internet, right? I mean, this is real investment, and there are real penalties if you don't conduct yourself in a professional manner. Yeah.
So walking through Denver Heights as an example, did the project get the property under contract and have a closing schedule, go out to raise the funds in order to close on the property, or do you think the scenario was they purchased the property, now they needed the capital to remodel the property, or kind of whole?
So in that particular case, they had already obtained an option on the property. I think they had like a 60-day option on that, so they were able to acquire the property and fund the refurb all off of the Mass Venture cash. The second one, the Denver Heights one, the East SA was the one I was talking about. The Denver Heights one, they already owned the property on that, and they were just raising money for the remodel. And then on Cowboy Crossing, they had private money that they used to take down the property, and the crowdfunded money is being used for the refurb and to pay back some of that high-cost capital that was on a pretty short-term financing. So there's a lot of ways to do it. Right now, we have not had a situation where somebody has gone in and had sort of a blank check saying, I want to raise money and I'm just going to go buy something. We could technically do that, but we made a decision not to. So every project right now that's on the platform has to have an identified property, and it has to be under an option or a contract or something else. Yeah, in the back.
What kind of information do you require from the sponsor? What kind of, do you ask them for a business plan, performance, all this kind of stuff before you allow them to move ahead?
Yes, so they have to have a business plan. They generally have to have pro formas. In the startup context, that's a little different because it's kind of hard to tell with a startup business. But for most things, yeah, you've got to have all your projections in place. You've got to have all that. And you have to have a disclosure statement which is filed with us and with the securities board that goes through and talks about the management of the company, that talks about the fees and costs associated with it, that talks about the anticipated use of funds, that talks about the risks, right? You know, so if I'm investing in a real estate deal, what are some of the things that could go wrong with this? And that gets put on file with the state and of course is provided here. Now things like a pro forma, that wouldn't be filed, but it's available for investors to look at on the platform.
Have you used this vehicle for a public nonprofit project?
No, and I've been asked about that quite a bit. I think the biggest issue is by definition a nonprofit is not generating profit for the investors, which makes it not a good fit for us. There may be some creative ways of doing that, but generally if you're doing something like that, a GoFundMe campaign or one of these other donation-based platforms is probably a better fit. Yes?
What's the liability to the investors? If the project goes bad?
Yeah, generally there's not a liability to the investors. Almost all of these are structured as a limited partnership or as an LLC where the investors are limited partners. So at least under the Texas Limited Partnership Statute, an investor who's a limited partner, I mean not a managing partner, is limited to the amount of their investment. So what the money you invested is what you got at risk.
Same tax implications as any investment, like, can you write off your losses?
Yeah, and so this is actually something where, you know, we offer the ability for any corporate structure to be used, and it's one of the things that makes Texas a little bit unique. Some of the other statutes require you to be like a C corporation, for example. We are allowed to do an LLC, a limited partnership, a corporation, so depending upon the company's structure, depends upon how those investments are treated. But certainly on a pass-through entity like a LP or an LLC, then if there are losses, those losses would be available to the investors on their returns as well. Although we've not yet had that situation.
You mentioned a raise in the cap for the accredited investor. Do you foresee any raise in the cap for the unaccredited? And is there a push for that?
Possibly. I mean, I think, you know, what we generally see is it's $5,000 per project, not per person. So what that means is if I have, you know, $50,000 that I want to deploy, then I just need to find 10 projects. And that's good because you're getting that diversification anyway. If you're an accredited investor, the securities board assumes that you are planning for diversification on your own. And so that's why there's not a limit in that particular case. But in general, it's probably going to be $5K per investment for the foreseeable future. So. All right, well, thank you everybody for coming.